We're news for business people.
Hello and welcome. You're watching Ask BQ on Bloomberg Quint. I'm Pradeep Pandya.
Hi everyone, and I'm Navneet Saluja D'Souza. This is the show where we address all your stock queries. You can write to us on Twitter, Facebook, or just call us on 022-4540-4141. You can also mail us at askbq@bloombergquint.com with all your financial queries, and we'll try and address them as many queries as possible on the show. Just remember to add the AskBQ hashtag. Let's get in our two experts of the day then. Sameet Chavan of Angel Broking and Gaurang Shah of Geojit Financial Services are here to answer all your queries. Welcome to the show, gentlemen, and good afternoon to both of you.
Well, before that, let's have a look at how markets are doing. Sensex and Nifty and most of the sectoral indices, barring a few like IT and Realty, are actually in red. Yesterday, we did see markets recovering from lows, but today, once again, under a global backdrop that looked weak. This morning, when Hang Seng went all the way down by around 350 points, and most of the Asian indices were trading low after yesterday's sell-off in US. We opened weak, and we have hit newer lows during the day, one should say. If you look at some of the key losers, the sectors which have been leading on the downside, well, by the way, India VIX is one relief. I would say it is not going above 15 today. It's corrected a bit. That could be just one positive in this otherwise weak market. The key losers today would include metals, both base metal and steel companies, Vedanta, Hindalco, Tata Steel, all leading the charts. Also, some of the high beta mid caps like Shankara Building, Radico Khaitan are also down with good volume, and Shilpa Medicare has lost around 4% because of the development at one of their plants where they've received some US FDA alert. On the positive side, however, even in a weak market, if you look at the market breadth, it's not very bad, it's not too negative. And some of the mid caps like Dish TV, after positive brokerage reports that have come out, KPIT Tech, Bajaj Electricals are doing well. I mean, some more names you would see, select fertilizer stocks are doing well. Fact would be one name there. Prabhat Dairy, this would be the second day of positive trade at this counter. And Reliance Defense, interestingly, these are some stocks that are doing well. So select buying interest in mid caps, although overall undertone remains weak.
Well, clearly, as market awaits the RBI monetary policy decision today, there is some weakness which still persists in the markets. Let's address our viewer queries on that note. Our first query today comes from Riaz Chamail, who's written to us on Facebook. Riaz wants to invest in ITC. He has a 6-month view, and he wants to know if this is the right time to invest into this counter. Gaurang, I'll come to you for ITC. Another heavyweight of Nifty, but it has been underperforming after the GST rates were tweaked on cigarettes. It's trading, if you look at the valuations, it's cheaper than HUL. Would you advise somebody to buy ITC?
Well, I would definitely advise, and good afternoon to all, first of all. I advise to buy ITC. Even at 250 levels, the downside is extremely protected. But the only thing is, this is not a 6 months recommendation that I'm giving. You need to have at least 1 year plus time horizon to get meaningful returns. And if I'm not mistaken, our targets are 345, but these are our long-term targets I'm talking about.
Okay, so you remain positive with long-term high targets actually on ITC, which means one needs to probably wait for a longer time for decent returns from current levels. Let's move on to the next query. Abhinav Sinha calls us from Mumbai with a query. Hi, Abhinav. Good afternoon.
Good afternoon, Pradeep. This is Abhinav. So my query is regarding PTC India. I have 150 shares at the rate of 90.23 rupees, and I can hold it for about 4 years. And I can put in some extra capital, around 20K in this if required. So request your advice on that.
Okay, so 4 years perspective, fairly long term, you want to hold it on to, you're sitting on gains. Is it an opportunity to add more? That's an interesting question, Gaurang. What do you advise?
Well, again, we have a positive coverage, and 4-year time horizon is a very decent long-term time horizon, according to me. We are working with targets of about 135, 145, if I'm not mistaken. And again, Abhinav, I would request you to review your investments every 6 monthly, yearly, especially on the financials, quarterly, yearly results. And the good part, Pradeep, about this particular stock is that it has virtually come out of its negativities, which was an overhang on the counter. So again, 4-year view, excellent. You want to buy more, you can definitely add to it. Start adding at current levels, and possibly on dips you can, add more instead of buying it at one time. And markets are not running anywhere in the near term. You have the RBI credit policy this afternoon, then you have the Gujarat election result on 18th of December. My sense is that we are in a range, and possibly there could be some amount of downside. So stay invested, buy more at current levels and add on dips.
Okay, add on dips and stay invested is the advice coming in from Gaurang on PTC India. Let's move on and take Sandeep Joshi's query. He's written to us on Facebook. He wants to invest in KEC International with a short-term view. He also wants to know if this is the right time to invest in this stock. I'll take this query to Sameet. The KEC International, a stock which has more than doubled this year and is also hovering around its all-time high levels. Do you think at 314, from a shorter-term point of view, would you advise somebody to put their money into it?
Good afternoon, Navneet and Pradeep. First of all, the stock has already run up quite a lot in last few months, and it has been consolidating since last 3-4 weeks now. At current level, it becomes very difficult to give any kind of trade setup in this particular stock. It has been consolidating. If I have to take any fresh call, I would rather wait for a dips to happen, a decent dip toward 280, 270. That seems to be a very strong support. Or else, if this stock gives a breakout beyond its near-term hurdle of 330, 332 on a closing basis. In this scenarios, I would certainly get into this particular stock, not at current level.
Okay, so you can add on declines, but not at current levels. That is the call on KEC International. Hari calls us from Bengaluru. Good afternoon, Hari. What's your query?
Hey, hi, good afternoon. Good afternoon, sir. Thank you very much for giving me the opportunity to speak. My question was, I have 500 stocks of Apex Frozen, which I picked up at 361, and I intend to see if there is an opportunity to opportunity for the stock to kind of ride the Avanti feet kind of wave. Is it a good time to sell, or do you recommend holding it or buying more?
Apex Frozen, you kind of entered at the right level, and stock has almost tripled from that level, or even from the listing level. Stock has gone up by around 4 times in what it got listed in September, I guess.
You know what? It's been locked in upper circuit for multiple days. I don't have the right number.
Most of the time, the move is on circuit. It opened in between for a while, but most of the days, I mean, so far after listing, I can safely say that 80% of the days when the stock has traded, it has been locked on the circuit. Actually, a few times on the lower circuit as well, but mostly on the upper circuit. Now, what do you do with a stock like this? Gaurang, what do you advise?
Well, Pradeep, we had a subscribe recommendation, and given the returns that the stock has generated, my humble request would be to take off at least book part profit, maybe 25-30%, bring back your capital and a little bit of profit, diversify into others, and balance you can continue to hold on. But this circuit to circuit is something that scares me a little bit, and at current levels I would definitely not advise any fresh buying. But if profit needs to be booked, either full or part can be booked, and whatever profits are pulled back, you can diversify or invest into something else, maybe something like an IGL, that is Indraprastha Gas, Gujarat Gas, Mahanagar Gas. We are extremely positive on these alternative fuel themes minus the fossil fuels. So, diversify and book part profits.
It's interesting. Diversify, book some profit, take at least your capital off, but most interestingly, don't diversify it into Avanti feeds or water base. Diversify into something unrelated.
In fact, we did speak to the management in the morning. They had come for Indian Open. They were sounding pretty bullish with regard to maintaining their growth levels, at least going ahead. And because they are, majorly into exports is what they highlighted. The margins there are pretty high. So let's see. We'll have to wait and watch for more numbers to come by for this particular stock. But the advice, Hari, Gaurang is giving at least book partial profits. Let's move on. Akshat has written to us. He's bought 300 shares of Linde India at a price of 374, and he has a 6-month view. He wants to know what should he do. Sameet, Linde India, he's bought at 374, and the shares are currently at about 494. Do you think he should book profits or stay invested?
Looks good. The overall chart structure is quite encouraging. The stock has managed to give a decisive multi-month breakout from a resistance of 460, 465 last month. It has been consolidating in a range, but looking at this broader degree chart structure, we believe that the stock has a potential to move beyond 550 also. He can maintain his position, he can keep a strict stop loss somewhere around 450 on a closing basis and stay put.
Stop loss at 450 on closing basis is the advice coming from Sameet. You can hold on to your position. Arpit Maheshwari, he has written on Facebook, bought 100 shares of Care Rating at 1064. He also has a 4-year view. This 4-year view is interesting. What should he do now? Care Rating, 4 years view. Gaurang, what do you suggest? Right now, he has decent profit of around 30%.
Well, again, these are companies which you hold on from a very, very long-term time horizon, given the kind of, activity that they do, this rating of papers, whether it is IPO, bond, debt, etc., etc. And given the outlook on the markets and the financial market especially, I think there is a lot that needs to be seen in terms of new paper hitting the market, both in terms of equity as well as debt or bond. And more the merrier for companies like, CRISIL, Care and ICRA. Continue to hold on, though you're making 30% profit. My sense is that there is a lot to be made in terms of return from these kind of stocks.
Okay, that's the view on Care. Balaji Srinivas has written to us. He wants to invest in Lupin and Sun Pharma, and he has a long-term view here. He wants to know if this is the right time to invest. Gaurang, well, our viewers are back with pharma questions, and I'm going to post that back to you. A view on pharma, Sun Pharma and Lupin, are these two feature on top of your list when it comes to investment in the pharma sector?
Well, I'm glad that people are now awakening and realizing that, Indian pharma sector is not something that you can write off. And I equally hold that opinion and view, Navneet, on Indian IT sector as well. And as a brokerage house, we have been extremely positive for the last year and a half on both these sectors that we are part of. So Sun Pharma, I think there is a lot of pain still left in terms of recovery. Though they have got an in-principle part approval for their Halol facility, and some of the manufacturing activities they have shifted from Halol to some other facility. My advice would be to look at, if you're not invested in, if you make a fresh investment. And I think Natco, Aurobindo, Alembic, Alchem Laboratories, I beg your pardon. These are some of the stocks that you should be buying from a long-term point. We are equally positive on Lupin as well, but there is a lot of resolution that the management needs to do in terms of the questions that have been raised in the recent past, and that may take about a year and a half too. So unless you have that kind of a time horizon, you can buy Lupin, or else from a year plus kind of a time horizon, Aurobindo, Natco and Alchem Laboratories, these would be the preferred picks.
Okay, so these are the pharma stocks that one should be looking at. Alchem, Aurobindo and Netco are the stocks that Gaurang really likes. Moving on to the next query from Facebook once again. Akshay has written to us. He has bought 1,000 shares of NIIT at 93 with a long-term perspective. He wants to know whether he should hold on or exit. NIIT now quoting at 94. So maybe he has bought recently. Sameet, what is your call on NIIT?
See, the stock has been consolidating in a range since last 1.5 months. However, the overall chart structure does not suggest anything. The only positive thing is 90-92 holds a very strong support, at least in the near term. So as long as it manages to stay beyond 90 rupees, he can stay invested. 90 would be the level to watch out for. So he can keep a stop loss below 90 on a closing basis, and he can maintain his position. And once this stock surpasses 102, 103, you could see a good move towards 110, 112 also.
Okay, so a stop loss of 90 is being advised by Sameet on NIIT, which currently trades around those levels of 95. Let's take some more live queries coming in on Facebook. And Mohammed has written to us. He's bought 100 shares of Glenmark, which he's bought at a price of 701. He wants to know what should he do. Well, Glenmark's down almost 40% this year. It's corrected from those levels of 973, which were seen in the month of February. But Sameet, what do you think he should do? Book losses? The stock is currently trading around 540.
Clearly, it has been declining since last many months now. It's like a falling knife right now. So I don't see any major support before 480, 500. So any bounce would be a good exit opportunity. And within pharma space, if we want to get into a particular stock, then Cipla is the one stock that we have been liking. 590, 595 seems to be a very strong support. So he can get into Cipla. for a target of say 650, 655 and place a stop loss somewhere around 570.
Okay, so Cipla looks better than Glenmark. That is the call coming from Sameet. Ankit Veera has written to us on Facebook. He wants to invest in SBI with a long-term view. Is it the right time to invest? What would be the right level, Sameet, for Ankit to get into SBI with a long-term perspective?
See, even we are quite a bit on this particular stock with a slightly medium-term perspective. At current level, we would expect some kind of correction. The stock is likely to head towards 300, 295, which seems to be a very strong support zone. So if this stock, reaches 300, 305, you should start accumulating in a range of say 305 to 295.
Okay, that's the view on State Bank of India. Remember, the banking counters will be in focus today because of the RBI monetary policy, so you could expect some volatile moves coming about. Our next query comes from Akshat Maheshwari. He's written to us on Facebook. Akshat has got 1,000 shares of Vehement Laboratories, which he's bought at a price of 120. He's saying he has a long-term view of about 2 years. He wants to know what should he do, and the shares currently are trading around the mark of 112. Gaurang, do you think he can make money here in the next 2 years?
Well, if he makes a shift in his investment, he can definitely. Unfortunately, I don't have a specific coverage on BB so can't comment on that. But move into Granules India. I think at about 135 or thereabouts the last time that I saw. We are extremely positive on this one. And from a 2-year time horizon, well, you can definitely make some decent return.
Okay, so that's the call coming in on Granules India. Moving on to some more live callers on Facebook. Bhavani Shankar Behera wants to know about Purvankara. He's holding 2,000 shares at 152 rupees. He hasn't really mentioned what kind of time frame he's looking at, but he's currently down by around 18 rupees per share. Sitting on a loss, Sameet, what would be your advice?
So this stock has already doubled in last 2 months. So obviously, with the market correcting from higher level, we are seeing some kind of profit booking in this particular stock. It might extend a bit, but if he has a medium to long term perspective, he can definitely stay invested. There's a strong support in the zone of say 120, 110.
Okay, and Harsh Kothari has written to us. He wants a long-term view on LT Foods, and I think LT Foods has done pretty well this year. Let me just check the returns. Yep, it's up 160%. And not only LT Foods, other rice stocks like KRBL too have been performing pretty well. Gaurang, view on LT Foods. Would you recommend somebody to buy at these levels?
Well, I'm afraid don't have a coverage, so I won't be able to answer this.
To Sameet and get a technical check on that. At levels of 74, Sameet, would you recommend anyone to buy LT Foods?
Looks good. It has been consolidating in a range since last 6 months. I would rather wait for a breakout to happen. It is near to its important resistance zone, which is around 75, 76. So I would rather wait for a breakout to happen beyond 76. If that happens, then one can get into it for a target of 85, 86. And on the low side, 68, 70 would act as a very strong support.
Okay, 68.70 is an important stop loss level on LT Food. Let's move on. Shine Paramil has written to us on Facebook. Federal Bank 112 shares at 112 rupees, 100 shares. Need a long-term view on this one. Federal Bank, I think, is a long-time favorite with Gaurang. Gaurang, what do you really advise?
Yeah, it has been, Pradeep. Thanks for remembering that. And 145, 165, these are the two targets. And I'm extremely excited about the earnings improvement for the last quarter, second quarter of this fiscal. And if I have to reflect upon the commentary of the management, I think they're looking to hive off some of their other businesses, non-core businesses, possibly unlock value as well over a longer period of time. And if this is the run rate and the earnings improve, then I think we should revise the target up. 145 to 165 are the current long-term targets for us.
Okay, that's the view coming in on Federal Bank. We've got Arpit Maheshwari, who has written to us. He wants a long-term view on Wellspun India. Gaurang, I'll take this question back to you. The stock's not done too much this year. If you track this, would you advise somebody to buy Wellspun India?
Well, again, we've been positive and not done much because of the news flow, which was on the negative side. The stock corrected from 80, 90 odd levels to about, I think, 60 or sub 60 levels. Correct me if I'm wrong. And then it is just trying to recover. Long term, we are positive, but given an option, my sense is that metal, cement, NBFCs, banking, auto ancillary, these are the sectors which will, and of course FMCG consumption-driven themes, will do extremely well over a longer period of time.
Okay, so that's the call on Wellspun India. Future supply chain logistics IPO. Harshavardhan wants to know, what is your view? Gaurang, what are you advising?
I'm sorry, which one?
Future supply chain logistics IPO.
Okay. Yeah. So I beg your pardon. Yesterday itself we came out with an IPO note, and we have advised a subscribe from a long-term point of view. And I think this could also be one of the stocks from the future group which will unlock value. And I'm quite sure Mr. Vianney will leave no stone unturned for that.
Okay, Nitish has written to us on Twitter. He's got DLF shares, 600 shares, which he's bought at 232, and he needs a suggestion for 3 to 4 days. And I think Nitish has been writing to us in the last 3 to 4 days with regard to DLF. Sameet, 232, a time horizon. He's trading in this, so 3 to 4 days. What sort of target price and stop loss would you advise him?
See, overall this stock is showing some kind of strength, but the way market has been correcting since last 3-4 days, and we have been quite cautious, and we would expect continuation of this corrective move in the market also going ahead. So this being a high beta counter, we would expect some kind of correction along with the market move also. So at this juncture, it would be very difficult to give any upside targets. 235, 236 seems to be a very strong resistance. So I would rather ask him to exit. If he has a short-term view, 3 to 4 days view, then he should exit. And once the stock gives a decent dip toward 220, he can re-enter.
Okay, that's the call on DLF. Let's move on. Akshat Maheshwari wants to know about UFO movies. He has 100 shares, bought at 400, and he has a long-term perspective on this. Right now, he's sitting on decent gains of 10 to 12%. Gaurang, are you tracking this stock?
This one, but on the exhibitor entertainment related sector, they are extremely positive on PVR. So if you want to make a switch, I think PVR would be a better investment idea.
Okay, on that note, we'd like to thank both our guests, Sameet as well as Gaurang. Thanks a lot for joining us today and helping our viewers with their queries. Let's move on. We've got Sindhu Sameet, CEO, co-head Institutional Equity Sales. MK joins us from the sidelines of the MK conference. Hi, sir. Good afternoon to you, and thanks a lot for joining us. First up, I just want a view on the markets. Has the sentiment changed in the last few days? Because we've seen the markets correcting almost 3.5% to 4% from those high levels that one had to see. What are you advising your clients at the moment?
Well, 3 to 4% kind of a move in the markets will not alter the sentiment. The fact is that the markets are not cheap. That's one reality. So market is vacillating around that reality. At the same time, it is a fact that India will be a 3 to 4 or 5 trillion economy in the years to come. If one has to participate in that kind of a growth story, capital markets in India are the best possible place where one can stay invested and bet on that opportunity. Just to remind of the facts, when I joined the capital markets, Indian economy used to be somewhere around 300 to 400 billion. And today it is a 2.3, 2.4 trillion kind of economy. So if one has to participate in the growth of Indian economy, which at a nominal rate is nothing less than 13 to 14%, capital markets are the best place. Of course, in the short to medium term, there might not be very many high level of gains available, but as a long-term opportunity is still the best place to be in.
So markets are expensive. That is the kind of feedback you are getting in your conference?
That's not the feedback we are getting from the conference, of course not. Those are the valuations which are visible to everyone else. The feedback which we are getting from our dealers, and we have an eclectic collection of dealers from autos to cement, to FMCG, to consumer durables and all kind, is that post the GST, the demand revival has been a real story. It's picking up not to the amplitude and magnitude to what it should ideally pick up, but then the incipient signs are very favorable, and gradually in a graded manner the demand is coming back. So that's a distinct sign. Of course, we have to have this theme in our minds that there is an overall shift from unorganized to organized. That's adding a flip to that demand revival, but demand revival is happening, is coming back. What we might debate is the magnitude of that demand revival.
Would you expect, going by the feedback that you are getting, would you expect that on all these consumer-facing sectors, your analysts will be able to upgrade their earnings going forward over, say, a quarter or two?
I think analysts, by and large, since last 2 months, saw it coming. So there is no immediate case for an earnings revision or an upgrade in earnings. What is sacrosanct and what is a reality of FMCG is the swollen multiples. All the major FMCG companies which will be compounding anything between 15 to 25% are today not available anything less than 30 times forward, 34 times forward, and I'm talking of FY19 or FY20. So I think the market in its wisdom, and analysts are part of that wisdom, has seen it coming, and they have captured it in the multiples, even if they have not captured in the earnings. So that's the reality. So put it simply, we are not looking for a re-rating in terms of multiple, but earnings growth will definitely be there. Perhaps if in the days to come the demand revives and it is a pleasant surprise or a positive surprise to the analysts, I don't think so they'll be found wanting in terms of increasing their earnings estimate for 19 and 20.
So before we let you go, just last question, since you're interacting with dealers of various sectors, which dealer, or rather which sector dealer is sounding the most bullish when it comes to revival in demand in the near term?
There is a one-word answer to that: FMCG.
All right, we'll leave it at that note. Thanks a lot for joining us today and giving us your views on the markets. But on that note, we'll call it a wrap on this edition of Ask BQ.
But remember, we are just a tweet, post or a call away, so keep your queries coming and we promise to address all of them through our shows. You can also log on to bloombergquint.com, search for hashtag AskBQ and get answers to all the queries that were discussed on the show. Power Lunch is up next. Keep watching Bloomberg Quint Live.